Welcome to our deep dive into the world of business finance, where we are going to explore the best corporate credit cards of 2026. Choosing the right card is no longer just about having a plastic rectangle in your wallet for emergencies, but about maximizing every single dollar your company spends. Today, we are breaking down the massive debate of points versus cash back, while also looking at the current landscape of interest rates and annual fees. As of early 2026, we are seeing a fascinating shift in how banks are competing for your business, with welcome offers reaching record highs and travel perks becoming more integrated than ever before. Let us start by looking at the heavyweight champions of the points world, which are currently dominated by premium options like the Chase Sapphire Reserve for Business and the American Express Business Platinum Card. These cards are designed for companies that travel frequently because the points you earn can be transferred to airline and hotel partners to unlock massive value, often far exceeding a simple 2% return. For instance, the Amex Business Platinum is currently offering a staggering 200,000 point welcome bonus, which can be worth thousands of dollars if you know how to navigate the transfer partners. However, these points cards come with steep annual fees, often ranging from $395 to nearly $900 per year, so you must ensure your spending and travel habits justify the cost. On the other side of the ring, we have the cash back cards, which are the preferred choice for business owners who value simplicity and immediate liquidity above all else. Cards like the Capital One Spark Cash Plus and the Wells Fargo Signify Business Cash are offering unlimited 2% cash back on every single purchase without any confusing categories or redemption math to worry about. For a business spending $50,000 a month, that is a clean $12,000 back into your bank account every year, which can be used to cover payroll or buy new inventory. Now let us talk about the elephant in the room, which is the interest rate environment for 2026. While we have seen some minor rate cuts from the Federal Reserve recently, the average business credit card offer is still hovering around 19 to 20%. This means if you are carrying a balance, the interest charges will quickly devour any rewards you have earned, making the points versus cash back debate irrelevant if you do not pay in full each month. We are also seeing a rise in charge cards like the Capital One Spark Cash Plus or specialized fintech cards from companies like Ramp and Brex, which require you to pay the balance in full every month but offer higher credit limits and better expense management tools. For small startups just finding their feet in 2026, cards with no annual fee like the Inc. Business Unlimited or the Blue Business Cash from American Express are fantastic starting points because they offer a solid 1.5 to 2% return without adding an extra line item to your budget. When deciding between points and cash back, you need to ask yourself if you have the time to manage a complex rewards system or if you just want to see your bank balance grow automatically. The best strategy for many medium-sized businesses in 2026 is actually a hybrid approach, where they use a premium points card for travel and advertising spend to get those 4 times or 5 times multipliers while putting all other general expenses on a flat 2% cash back card. Finally, always keep an eye on the fine print regarding foreign transaction fees, because if your business operates globally, a card that charges 3% on every international purchase will negate even the best rewards program. In summary, the best card for you in 2026 depends on your specific spending volume and your willingness to play the rewards game. Whether you choose the luxury of airline lounges and first-class upgrades through points or the cold hard efficiency of cash back, staying informed on these trends is the best way to keep your business's bottom line healthy. Would you like me to create a comparison table of the specific cards mentioned in this script with their current 2026 fees and rewards? Welcome to our second deep dive into the business credit landscape of 2026, where we are looking at the critical differences between traditional banking giants and the new wave of fintech solutions. As we move through early 2026, the competition has intensified, with Chase and American Express pushing their premium offerings even further, while players like Capital One and Wells Fargo are simplifying the rewards game. For small business owners, for those of you focused on travel rewards, the Chase Sapphire Reserve for Business and the Amex Business Platinum remain the gold standard, but they now face serious competition from the Capital One Venture X Business, which offers a simpler 2x miles on everything and a much more manageable annual fee of $395. Many business owners are finding that the Amex Business Platinum, which now carries an annual fee of $895, requires a full-time job just to track the various statement credits and coupon-style benefits. Meanwhile, the Chase Inc. Business Premier has carved out a unique niche as a premium charge card for high spenders, offering an unlimited 2.5% cash back on any single purchase over $5,000, which is a game changer for manufacturing and logistics companies with massive individual invoices. Speaking of interest rates, the environment in 2026 remains complex because while we have seen some national averages drop to around 19.6% from the peaks of 2024, carrying a balance is still a recipe for financial disaster for any growing company. There is even talk in the political sphere about potential interest rate caps, which has caused some volatility in the banking sector. But for now, the best strategy is still to treat your corporate card as a payment tool rather than a loan. For businesses that prefer the certainty of cash back, the Wells Fargo Signify Business Cash and the Capital One Spark Cash Plus are leading the way with flat 2% returns that hit your account without the need to calculate point valuations or airline transfer ratios. We are also seeing a massive rise in smart corporate cards from fintech providers like Ramp and Brex, which offer zero interest because they are strictly pay-in-full cards, but they provide incredible value through automated expense management and real-time accounting integrations. These fintech cards often do not offer the traditional heavy sign-up bonuses of a Chase Inc. card, but they save businesses thousands of dollars in administrative labor by automatically chasing down receipts and categorizing transactions using artificial intelligence. If your business is still in its infancy in 2026, you should look toward no annual fee gems like the American Express Blue Business Cash, which provides a solid 2% cash back on the first $50,000 of annual spend. For larger enterprises, the choice often comes down to the ecosystem, because if you already use Chase for your business checking and payroll, the ability to pull points from an Inc. Business Unlimited card into a Sapphire Reserve account can boost your redemption value by 50% for travel. Ultimately, the points versus cash back debate in 2026 is a question of whether you want to invest time into travel hacking or if you want the liquid efficiency of cash to reinvest in your operations. Interest rates will likely remain high through the end of the year, so prioritizing cards with long 0% introductory periods is a smart move. If you have upcoming equipment purchases or office expansions, keep a close eye on foreign transaction fees as well, because as global trade becomes more decentralized in 2026, even a small 3% fee can completely erase the benefit of your rewards program. By staying agile and matching your card to your specific spending categories like advertising or shipping, you can ensure your corporate credit strategy is a profit center rather than just an expense. Would you like me to write a script for a follow-up video focusing specifically on how to use iTools to automate your business expense tracking in 2026? And Brex, which require you to pay the balance in full every month but offer higher credit limits, and better expense management tools. For small startups just finding their feet in 2026, cards with no annual fee like the Ink Business Unlimited or the Blue Business Cash from American Express are fantastic starting points because they offer a solid 1.5 to 2% return without adding an extra line item to your budget. When deciding between points and cash back, you need to ask yourself if you have the time to manage a complex rewards system or if you just want to see your bank balance grow.